All right, ladies and gentlemen, this is Brad Matheny. Today is the 6th, the day after the election. We're seeing the markets continue to push a little higher here. We have now moved into this flagging very cleanly. I'm going to talk about this just briefly. So it looks like the flagging potentially is setting up a fairly broad flagging formation here. And as I mentioned to you guys earlier, we're watching this potentially fail right over in this area right here, right in that topping area. Mark that in red. We're watching for failure. I'm watching for failure right here, which would put the breakdown trend maybe somewhere over in here. I'll redraw it. It would probably be fairly quick, maybe after the markets close, moving back into a downside ultimate low here. So now we'll see how this plays out, but we're looking at a very interesting excess phase peak type pattern here in the ES. Come over and take a look at the NQ. Same. NQ is actually accelerated. So let's take a look at this now. This invalidates this. Invalidates this, invalidates this, and invalidates this. We have now rallied up into this rally phase here. We had the excess phase peak A and B formation here. We rallied through this high, coming up into this area. So now we're looking for a new peak, rolling back down and potentially flagging out like this, or maybe a little deeper. We would still want to watch this level here, so I'll leave this here, but getting some real momentum here. So let's come over and take a look at the crash index. Dollar is still quite a bit stronger. S&P is higher. Gold is down, holding up okay. The crash index moving higher here means that we've now moved very solidly away from a crashing or consolidating move in the markets. 1,400 point move in the Dow, a 528 point move in the Nasdaq. Granted, a lot of this was overnight. 123 in the S&P 500 and 13, almost 14 points here on the S&P. Let's come over and take a look at gold and silver. Gold and silver are basing. I mentioned this to you guys earlier that we would likely hold up into a basing pattern over here. Understand that this basing could take a day or two to really flag out. I tried to mention it to you in the earlier video, telling you that it could take a couple of days to really base out here. But what would happen after this base sets up is we would get a nice solid rally, as I drew right out here, back up, more than likely back up to the recent highs, which, remember, our recent highs, go back to 4 hour, are up here near 2,800. So, what I'm looking at is a recovery, pause, recovery, back up into this area, and then we will pause a little bit in this area and then rally even higher. So this is a really solid move for metals, and the same thing will happen here. So you can see we are flagging. You can see the apexing formation, the flagging set up here. We're nearing the apex. We have probably this is a 30-minute chart here. I'll set this one back to 30-minute. And we are more than likely, again, more than likely, moving into an apexing formation across here. Give you an example. And probably somewhere like this. Obviously, these apexing formations, I'm going to show you guys a little something here. Trying to get right over here. Oh, does that. My mouse drops off at one point at this desk. Okay, so wanted to show you something, and that is the fact that the market only trends or flags. I've mentioned this to other people before. There's only two types of market trend. Market price action is either trending or flagging. So you need to understand that we're either trending or flagging. Those are the only types of price action typically price is going to perform. But flagging is an interesting concept because flagging, like you see here, you can see this flagging formation here and across here, is typically going to set up as some sort of an external price formation. So this formation we have down here sets up in his inverted bottom, coming back up to a pullback and setting up a flag. Okay, we've got the same setup here. Coming down here, a downward pullback, and then we're setting up a flag. So we are already setting up an inverted excess phase peak pattern that's likely going to break to the upside, consolidate, maybe break up higher, or even more aggressively break very strong, consolidate, and then rally up even higher. So understand that when in reality, when we're looking at price, there's really a couple of things you want to keep in focus, and that is either trending or flagging, and that flagging typically constructs some sort of an excess phase peak cycle. So understand that the excess phase peak consists of 5 separate phases. And whenever we get into flagging, you should stop and look for an excess phase peak. So we can come back over here and we can pick a symbol. I don't care. Let's just pick IWM for right down. Big gapping pattern. So you'd see this flagging formation, or you can actually see flagging right over here. So you can see right here, we come across this high, down into this area, and down into this area. We're flagging, right? But we also get this low, comes up and sideways flags, getting into our breakaway, which is up into this area to consolidate, very minor little breakaway. And then we finally broke yesterday, and now we're looking for that ultimate high up here. So again, when you get into flagging, when you start to see flagging, you can almost immediately assume that you're going to be getting into some sort of an excess phase peak pattern. Okay, it really is clean and present. You can almost look almost anywhere on a chart. I come over here on the daily chart, and you can do the same thing here. Anytime you get into flagging, like right here, you can come over and you can look back. Now, I would have to watch this. So hypothetically, the way I would do it is I'd come from this high, we come up, we flag, we break to a new high. We can't count this. I mean, we could, but still flagging to a new high. Come back down, flag, fail, consolidate into the flagging range here. That's this consolidation right over here. It never broke below the flagging range, and it never broke below this until we got right here. This is failure of the flag to move downward into that consolidation. We are now in a bullish trend. We come back over here. We get up to a new high right up here. We come back into flagging right here. We break down, and then right here we get above, slightly above, but right here we get above it. So we're above our previous highs, back over here. We're now in new bullish trending. So remember, you can go through pretty much any flagging formation and look for these types of patterns. They're there. I want you to be able to see them because it's important for you to understand that this is how price works. This is one of the key constructs of price formation. And of course, if you can see this, you can trade off of it. And it works on any interval, meaning that you can go down to a 1 minute or a 5 minute or a 2 minute, and it works. Okay. So you really have to realize that we're talking about a element of price that is always existent on the chart. You just have to look for it and find it. So someone once asked me about Google. So here's Google daily. So we come back and we look at historical ultimate highs and lows, right? Here's our ultimate low, and here's our ultimate high. Pretty simple to figure out. The highest high point, lowest low point that we can see on a major basis. So we start near those areas. Got a low, comes back, flags, breaks away, consolidates, rolls back down into the flagging formation, fails, sets up this rolling top, moves up to an ultimate high. Now we would be looking for a new flagging trend. So we would be looking for, we're in an uptrend. We know we're in an uptrend. We're looking for a peak. Here we come down into a pullback, move into flagging, break higher. Come down into a pullback, break higher. Come down into a pullback, break higher. Come down into a pullback, start flagging, get a little bit of rotation, fail to get below our levels, break higher, we're in an uptrend. We come over here into a pullback, flag, break lower, moving down into consolidation. We still notice that we still have this range here from the previous excess phase peak range. We fail to get below that level. We fail to really move. Now, I could look at this in more detail. And in reality, guys, no, we didn't get below the flag. So this is you could almost call this the consolidation and then an ultimate low, but I'm just going to call this a pullback. We're still within this range. We're still moving higher. Theoretically, we would have to break this area here to move into a downward trend. We rally back up. We continue to get pullback. So here's a little pullback, rally higher, new high, pullback, rally higher, pullback, rally higher, pullback, rally higher. Then we come up here, and this is where it gets interesting because you get these tight, quick little pullbacks. Okay, so we have an instance, we have a very quick kind of a move here. Now, what I'm going to look for is real consolidation. So, where I'm going to look for consolidation is probably right in this area, indicating that this is a breakdown and a roll. So, the way I would count this is peak, probably flagging into here, breakdown into consolidation, breakdown looking for the ultimate low, rolls back up, fails, comes down, sets the ultimate low right here. Now we would be looking at this ultimate low, this new ultimate low as a bottom coming down, looking for our flagging. This is the only flagging we get, really. And here's our breakaway up into consolidation. And we are now looking for the break to the upside, looking for the ultimate high, or a reversion failure trend moving back to the downside. That would come by breaking this level and moving downwards. So we're really looking at these levels. And remember, when you get into these modes where you get to these highs and lows, you can carry these all the way out. These become critical resistance. Sorry, that was my dead spot with my mouse again. So you see here how we can carry these out, and we can carry this out. So same thing here. We can carry this out as flagging and carry this low. I'm using low rejection points, by the way. And so now we come all the way back. So we've highlighted those flagging points. We have a number of flagging points here. We can carry every single one of these out. They represent key price points in the market. You see how this aligned right here with this consolidation? We have these little minor ones right here, carrying all the way across. So there's a minor, there's a we'll call this one the major. Well, we can go right here or here. I mean, this carries right across that low nicely. Then we end up with this big rotation right here, and you can draw them any way you want. I'm drawing them as lines, but you could theoretically draw them as boxes. And this is our low. This is our rejection point low. So every single one of these sets up, and here's our original one down here off of this low, sets up key price levels that we can watch for. And they become critical when you really start to understand how price moves. Price is always seeking new highs and new lows, meaning it's always trying to break above resistance or support. And luckily enough, these excess phase peak patterns identify very clear support and resistance, especially when you start talking about the what's called the number one phase. Oop, get rid of that. Especially when you start talking about like this, the number one phase and the number two phase here, the low of the flag in a regular setup, or the opposite, the high of the flag. So here we have in this mode, this is our high of the flag in an inverse setup right there. Market is red. And then here you have the low of the flag, which sets a range. This is a support and resistance range very cleanly. And you can see these play out on the chart. So they help you map out price levels that will play out through, into the future as price rolls around. Okay, so again, this update was really all about the ES and the NQ. It kind of moved into gold and silver. But, here we are with daily. And what we're looking at here is a big move. Remember, we have lost our patterns here, but a big new high. We're looking at, the end of a pullback, the end of flagging. We're at a new high. We're probably going to try to rally a bit higher. We'll see what happens. This is a big move today. We'll see if it carries over overnight. But what a big move. I mean, this is a stupendous move with very solid volume, up almost 3% on the election news. Very hard to get bullish in here right now, and I don't recommend it, or I mean bearish. Very hard to get bearish in here. The markets are moving higher. I strongly suggest you wait this out right now unless you're prepared to take your lumps overnight. Don't hold anything overnight. Okay, guys, talk to you later.